So, you're thinking about moving to Ireland for a new job. That's fantastic. But I know it can also bring up some pretty big questions, especially around things like visas and taxes. In this explainer, we're going to break it all down and give you a really clear roadmap for your journey.
You've landed the gig, you're ready to start packing. But what about all the paperwork, right? How exactly do Irish taxes work? Which visa do you even need? Don't worry, we're going to answer those key questions right now so you can get on with the exciting part.
Okay, first things first. Before we can even touch on taxes or paychecks, we have to talk about your right to actually work and live in the country. Your immigration path is step one, the foundation for everything else, and it really all boils down to your nationality.
Your journey here really splits into two different paths, and it all depends on the passport you hold. So if you're a citizen of the EEA, the UK, or Switzerland, you're pretty much good to go. You can work and live in Ireland without any special permission. For everyone else, though, and this is crucial, you absolutely must get an employment permit sorted out before you even step on the plane.
For non-EEA nationals, it's basically a three-step dance. Step 1, get that employment permit. Step 2, you might need to apply for an entry visa depending on your home country, and then Step 3, once you've landed in Ireland, you'll register for what's called an Irish Residence Permit, or IRP, which makes everything official.
Now, there are three main types of permits you should know about. First is the Critical Skills Permit. That's for top-tier talent in fields that are really in demand. Then you've got the General Permit, which, covers most other jobs. And finally, the Intra-Company Transfer is for folks moving within a big multinational company. The real differences come down to the minimum salary you need and the type of contract you have. That's what'll decide which permit is the right one for you.
Okay, once you've got the legal right to work all sorted, the next big piece of the puzzle is your money. And it all starts with this idea called tax residency, which is just a fancy way of saying it determines exactly how Ireland is going to tax you. Remember this number, 183. It's kind of the magic number for Irish taxes. If you spend 183 days or more in Ireland in a single tax year, boom, you're considered a tax resident for that year. There's also a backup rule, a 2-year look-back, where if you spend a total of 280 days over 2 straight years, you become a resident in that second year.
Now, this is where being a resident gets really interesting, especially when you bring in this other word, domicile, which is basically your permanent home country. If you're both resident and domiciled in Ireland, well, you're taxed on everything, your income from all over the world. But here's the key for most expats. You'll likely be considered resident, but not domiciled. And that's a huge difference. It means you're taxed on your Irish salary, of course, but for foreign income, you're only taxed on what you physically bring into Ireland.
So, what does this all actually look like when you get that first paycheck? Let's pull back the curtain and break down the main taxes you're going to see coming out of your gross salary.
When you look at your payslip, you'll see 3 main deductions. First, there's PAYE, that's your standard income tax, pay as you earn. Then there's USC, the Universal Social Charge, which helps fund public services. And finally, PRSI, which is your pay-related social insurance, kind of like Social Security. Those 3 are the core of your tax bill. For the main income tax, PAYE Ireland uses what's called a progressive system. Let's take a single person in 2024 as an example. You pay a 20% rate on the first €42,000 you earn. It's only the money you make above that amount that gets taxed at the higher 40% rate. So it's really important to remember not all your income is taxed at that top rate.
All right, now for the part you've probably been waiting for. Ireland really does want to attract skilled professionals from around the world. And one of the ways it does that is with some seriously attractive tax relief programs made specifically for people like you. Okay, the biggest and most important tax break you need to know about is the Special Assignee Relief Program, or as everyone calls it, SARP. Seriously, if you're a high-earning professional moving to Ireland with your company, SARP is a total game changer. It's Ireland's way of rolling out the red carpet for top global talent.
So, who gets to take advantage of this? Well, the main rules are pretty clear. You need a base salary of at least €100,000. You also have to be new to the Irish tax system, meaning you haven't been a resident here for the last 5 years. And your employer has a little homework to do too. They have to officially certify that you're eligible pretty soon after you arrive. So how does the math on this actually work? It looks a little complicated, but it's simpler than you think. Basically, you take the part of your salary that's above €100,000, and 30% of that amount is just ignored for income tax. So let's say your salary is $150,000. The amount above the threshold is $50,000. You get tax relief on 30% of that, which means a €15,000 tax-free deduction. That is a very nice benefit. Now, income tax is definitely the biggest piece of the pie, but it's not the only one.
So let's quickly run through a few other taxes you should probably have on your radar while you're living in Ireland.
So if you sell assets like stocks and make a profit, you could be looking at capital gains tax. If you decide to buy a home, you'll pay an annual local property tax. And the act of buying that property involves a tax called stamp duty. Finally, if you receive a really large gift or inheritance, there's a capital acquisitions tax. Just good things to know so there are no surprises down the road.
So there you have it. From visas to paychecks and some pretty powerful tax breaks, you've now got the blueprint for a really smart financial start in Ireland. Honestly, getting these pieces right from day one is the absolute key. So, the real question isn't just if you'll make the move, it's how you'll make Ireland's system work for you.